Hey everyone, welcome to This Explainer. So, whether you're actually chilling by the ocean right now or just really wishing you were, I invite you to metaphorically grab a cold, tropical drink, step into the shade, and join me. Today we're investigating a massive financial mystery. I mean, while so many people are just distracted by the summer sun, the world's oldest and most brilliant metal, gold, is breaking market records at blinding speeds. We're going to look closely at the data today to figure out exactly why this is happening.
Right. So what is actually happening with gold? While everyday folks are just trying to beat the heat and relax, global commodities are literally on fire. And this leaves us with a huge macroeconomic puzzle to solve. Who exactly is hoarding all the physical gold in the world right now? And more importantly, why in the world are they doing it? Don't worry, we're going to break this all down without any of that confusing financial jargon.
Okay, here's our roadmap for demystifying these forces today. We'll start with the new gold rush, then we'll look at the accumulating giants. After that, inflation and deflation, followed by the de-dollarization phenomenon. And finally, protecting your savings. Section 1. The new gold rush, uncovering the secret buyers. Look, if you're picturing, a sweet grandpa stuffing a couple of gold coins into a sock under his bed, yeah, you need to completely change that image. The entities that are accumulating physical gold at this dizzying pace are the true heavyweights of the global economy. We are talking about central banks across the entire world, shattering purchase records, scooping up over 1,000 tons of gold every single year. Section 2. The accumulating giants, central banks, and corporate hoarders. There is a massive, clear geopolitical divide happening right in front of us. Take Poland, for instance. They have gone on an absolute buying spree, holding over 580 tons and aiming for 700. Then you have China. Officially, they report holding over 2,300 tons, but, well, analysts actually estimate their secret reserves are probably double that, and they are buying month after month. Places like Uzbekistan and India, same story. They're relentlessly stacking bullion to shield their economies and ditch their reliance on foreign currencies. But contrast that with Europe and Spain. They're essentially sitting back, freezing their physical reserves without buying new grams. They're just relying on paper gains as the price of gold inflates the value of their current vaults, but they are absolutely failing to add real physical protection against any geopolitical surprises. But hey, it isn't just countries getting in on this rush. Private funds and corporations are scrambling for shelter too. Get a load of this staggering number. $20 billion. Tether, the giant company behind the stablecoin USDT, has transformed into a massive accumulator. They're currently holding between 132 and 148 tons of physical gold, all locked away in high-security Swiss vaults. And they aren't the only ones. Even massive U.S. tech companies are jumping in. Palantir literally bought up $51 million in pure gold bars in one single swoop. Their stated reason? To prep a systemic crisis bunker. I mean, when huge tech giants are building gold bunkers, it really leads us to the big question, why are they all doing this? Especially when we're constantly told the economy is supposed to be improving. Section 3. Inflation, deflation, and markets. The delicate economic equilibrium. So, here's the crucial point. We are trapped in a fragile, hyperdelicate balance right now. On one side, we have the fear of inflation, where governments just continuously print money, causing paper currencies like euros and dollars to completely lose their value. But on the exact opposite side, we have the fear of deflation, or recession. This is the nightmare scenario, where the economy just halts in its tracks, credit completely freezes up, and businesses go bankrupt left and right. To really wrap your head around how inflation actually works, consider this historical comparison. Back in ancient Rome, a single gold bar could buy a really fine, high-quality tunic. Today, that exact same gold bar holds enough purchasing power to buy a luxury car. People often think inflation means a loaf of bread or a liter of milk has magically just become more expensive, but in real economic terms, actually, scratch that, it's the exact opposite. The bread and the milk hold the same real-world value. It's the paper money you use to buy them that has just lost its power. The paper devalues, the gold does not. Now, on the flip side of that economic tightrope is deflation. If the economy suffers a sudden deflationary freeze, leaving everyone with only paper in their bank accounts super vulnerable to bank failures and frozen credit, well, you need a totally different kind of protection. Possessing a physical asset like gold, which isn't tied to someone else's debt or reliant on a bank staying solvent, becomes your ultimate guarantee of financial survival. It is quite literally the ultimate asset with zero counterparty risk. Section 4. The de-dollarization phenomenon, a real shift in global wealth. Let's see how this all builds logically. Step 1. For decades, the US dollar was the absolute king.
If China wanted to buy oil from Saudi Arabia, they used dollars. Step 2. Everything changed with recent geopolitical sanctions, specifically when the US froze Russian dollar assets practically overnight. That brings us to step 3. This acted as a massive catalyst. Emerging markets suddenly realized, wait, our paper dollars and US Treasury bonds can just be blocked by Washington with the push of a button? So they rapidly began shifting their wealth into physical gold. Acting purely as an economic catalyst, that single event completely shifted global risk calculations. Countries woke up to a really harsh reality and realized something fundamental. Physical gold stored safely inside their own national vaults simply cannot be frozen. It can't be canceled by a foreign power, and it doesn't depend on anyone else's banking system whatsoever. And that right there is exactly why emerging nations are dumping dollars for gold bars at a breakneck pace.
Section 5. Protecting your own savings, financial lessons for the household.
Now, before you sprint off and start burying pirate treasure on the beach, there's a specific, highly practical detail from our source data you need to know. Physical investment gold, meaning actual gold bars and coins, not just your everyday jewelry, is actually exempt from VAT or value-added tax in the Eurozone. It's super crucial to understand rules like this when looking at exactly how the big players protect their wealth. So what are the actionable takeaways here for your own personal economy? They're incredibly clear. First, never put all your eggs in one basket. You've got to diversify your savings, just like the world's richest nations. Second, stay informed on why markets actually move by using portals like Finanza Opinion. And third, make sure you build a solid, healthy resistance fund at home before you go chasing after the newest investment trend.
All right, so as you finish up that tropical drink, maybe apply a little more sunscreen and study the markets with a cool head, I want to leave you with one final provocative thought to investigate on your own. If the most powerful nations and the wealthiest corporations on Earth are desperately hoarding physical gold instead of trusting paper money and digital debt, well, shouldn't you rethink how you protect your own financial future? Thanks so much for joining me for this explainer, and keep learning.